Blog Talk Radio. Welcome to Women Who Rock Investigate, an affiliate of Women Who Rock with Success. We report case studies in the areas of policy and government, medical malpractices, health pandemics, biotech and fracking, global climate change, prison, and police reform, and more. Our topics are covered around the latest breaking news reports in the U.S. and around the globe. We can be heard on Spotify, Google Play, Google Podcast, TuneIn, iTunes, Podbean, Airtime Pro, and SAM Broadcasting radio stations, and more. Our hand-picked experts on the show provide credible information from their fields of experience. Join us on Thursdays at 10 a.m. Central Standard Time as we discover the latest in news reports. Now join us live in the studio with our show host, Mrs. Diane Winbush.
And good morning, and welcome to Women Who Rock Investigates. This is a spin-off podcast of our Women Who Rock with Success show. And so this one, we try to help individuals a little bit more in their daily activity, occupation, the corporate world, celebrities, whatever it calls for. We try to jump in and be able to bring the information and latest news. So today we will continue our discussion in real estate. Last week we brought you information, resources through real estate brokers and those who own their own firms in regards to the COVID-19 and how to protect yourself as a broker as well as a buyer. So this week we will be sharing information. Our platform will be giving you tools and resources as to in regards to real estate and how to prepare, get your checklist, and they're going to share with you a little bit about them. And we're going to get started. Our first panelist is going to be Tony Patillo. Our second panelist is Jeff Orlando, and our third panelist is Lisa Tilstra. So Tiffany will not be with us on today. She had a last-minute emergency. But good morning, ladies and gentlemen, and welcome to the podcast today.
Good morning.
Good morning.
Good morning.
Okay. So we're going to start with Jeff. We're going to start with him since he's the only male that's on here with us today. So we want you to share a little bit about, we want you to talk to the audience just a little bit about you and about your practice in real estate and how you got started. We want the audience to kind of feel a little bit comfortable with our guests.
Well, thank you. I started in real estate full-time in 2002. I have a banking and finance background, so I bring that to my practice. It helps out both my buyers and my sellers. The one thing that was missing for me in banking was making that more personal contact. It was moving money around and working on large transactions, and what I really like about residential real estate is making an impact in people's lives, whether it's first-time buyer, move-up buyer, somebody selling. Just real estate plays such a big role in people's lives. So that was really a motivating factor for me. My practice right now it's in California. It's mostly in Ventura County, the Simi Valley, Moore Park, Thousand Oaks area, Conejo Valley.
Okay, great. Okay, and thank you for that. So, Lisa, share with the audience a little bit about you.
Great. Thank you so much, Diane. So, yes, my name is Lisa Tilstra, and I am a real estate investor. I also have a real estate investing consulting business that I actually just started this past year in the middle of the pandemic. And I am a leadership coach. And my business partner and I specialize in helping Americans who live outside of the U.S. invest in great properties back in the U.S. through our company, the REI Concierge. My husband, both my business partner and myself, are married to American diplomats, so we live outside of the U.S., and I'm currently in Colombo, Sri Lanka, and never expected to be a real estate investor. But when I look back on my career as an investor, I realized when I first bought my own home to live in, that was the beginning of the journey as an investor. And that's one of the things that I like to help people realize is buying your own primary residence is actually a way of starting out in real estate investing.
Okay, great. Okay, so Tony?
Yeah, hi. Well, I'm Tony Patillo, and I'm a real estate broker. Been in the business for 21 years now. Started out here in Southern California, been here the entire time. I actually specialize in, I would say, working with people who are dealing with specific circumstances. When I initially got in the business, we were just ahead of the downturn. So by 2006, 2007, the market, as you know, and the economy started to shift. I then took it upon myself to master that market of the moment, and I worked with a lot of homeowners in getting through that distressed market. So I specialized in short sales, pre-foreclosures, and my passion is working with people, getting people through particular circumstances. When the market shifted and kind of recovered, I went to work with the 50-plus market, started working as a senior real estate specialist. I then took it upon myself to actually start teaching that, because a lot of our agents, had aging parents and some boomers themselves, and everybody was dealing with lifestyle transitions. So I started to teach the SRES course for the National Association of Realtors, and have since mastered several different aspects of properties, real estate representation in areas of where people are needing to get through particular circumstances. So that's pretty much what I've been doing all my career, is working with homeowners and buyers as well, and working with the real estate professionals and coaching them. I'm a mindset coach as well, so I really enjoy the work. It's not like work; it's actually a passion of mine. So I'm very excited about it.
Okay, perfect. Thank everyone for their introduction, and so we're going to get right into the Q&As, and we're going to start off with Jeff. And the reason why is because many times when we're looking for homes, we're looking for rental properties, we're looking for vacation homes, we're seeking for the homes that individuals can be able to purchase with these different packages that they have to offer. You come in for 4 days and 3 nights, and you stay for $99 and what have you. But the main primary thing is that we miss is the financial budgeting. So we want to ask Jeff and talk to him to see as to how an investor or a renter or a potential buyer needs to plan for their buying expenses. What is the first thing that they need to be doing to try to budget all of this?
Well, I'll have a little bit of a different answer for investor and for a home buyer and first-time home buyer. For somebody buying their personal residence, whether it's a move-up property or their first property, for me, it does start with the financing part. A lot of times people just start thinking about the home, which is obviously the impetus for what somebody's doing, and it's the emotional part of the process. For me, it starts with the financing, first of all, to make sure that somebody is capable of getting financing, and then to start diving in as to what kind of payment that they should be looking at. And the payment isn't only the principal and interest, that they also have to take into account the insurance for the property and the real estate taxes. Those are going to be the 4 biggest parts. You also have to think about maintenance when you talk about a budgeting standpoint. Sometimes I get people that use the online calculator to figure out what kind of loan that they should be getting, and that's a ballpark. That's like a automated valuation service online when someone's looking at what their home might be worth. It's a starting point. It's not the end point. So it's really important somebody get in touch with a lender that they trust. They can find that through, definitely through their real estate agent if they started working with an agent. And that person, that lender, should be putting somebody through a full process, starting out with a loan application and then getting the supporting documents that someone's going to have to supply to them anyway during the loan process or the loan approval process. And this way, somebody makes sure that they don't have any curveballs later on, that they know what their credit is, what their credit score is. Maybe some things need to be cleaned up, maybe not. Maybe somebody gets income other than from a regular W-2, from a regular employment, and there could be different rules or guidelines that lenders look at. So, getting a loan could be very straightforward. There could be some curveballs, and that's where everything starts. And then once somebody has that figured out, then they can start getting to the nuts and bolts of the purchase process and the kind of property that they're looking for. Would you like me to get into the investor part, or should we pass along to another panelist?
Okay, and we're going to go to another panelist, but thank you so much. That was very, very very, very informational. I like that. So we're going to go to Tony. So Jeff just shared a lot of information with us, about the credit score, how important all of that is. And a lot of times individuals, I was talking to an individual that we knew probably 20 or 30 years ago. So she called and asked for some expertise, and she was like, well, they sent me to this other lender and what have you. And like I explained to her, lenders are not going to loan you any money if you don't have anything that's already invested. You have to have something on your credit in order for them to trust that you will be able to pay them back. So what must a potential buyer consider first? When it comes down to credit score, how can they clean some of that up in order for them to be able to be successful? And this also will help to, pull down their interest rate as well. So share that a little bit about that.
Sure. Well, first and foremost, credit is everything. Credit scores, the higher your credit scores, the better off you're going to be as far as getting a lower interest rate. So it is really, really important to manage your credit prior to even getting with a realtor. You want to really get with a mortgage professional first so that you can get an idea as to where you are on the spectrum. And if it requires that you need to do some credit repair, they can give you some guidance in that direction. But ideally, you want to have credit, number one. Number two, the credit that you do have, you really want to maintain it at a rate of 30% or below what your limit is. That score, like I said, is going to dictate what your interest rates are. And interest is going to determine what your mortgage payment is going to be. So it's we have some tremendous programs out here today, and I'm not a loan specialist. I specialize on the real estate broker side and primarily residential, but there are a lot of amazing programs for first-time buyers and even for jumbo products. There's a lot of availability for getting with the low interest rates, you're going to definitely lower that monthly mortgage. And there's 15-year mortgages, there's 30-year mortgages, so there's pros and cons to working with both types.
Okay. So would anyone else would like to tackle that? You're free to do so. Okay. Well, we'll move on to the next question, and this is still in regards. We're talking about the importance of down payments. So, take for example a Christian church had borrowed a loan, and they built a very nice, sizable facility, and they were able to pay the interest and the principal, and everything was paid off and within 15 years instead of the 30. So that's still piggybacking on what Tony was referring to. So that question will be for Lisa, if that's something that she could be able to answer, because a lot of individuals, they were surprised. And so actually they had a financial planner that was also a part of their organization as well. And so they were paying something on it every 2 weeks that was able to tackle some of the interest. So that would be for Lisa, if she could be able to answer that.
Yeah, so I think that saving for a down payment, thinking about your payment plan is a really important part of the strategy of buying a home, whether it is for a primary residence or for an investment property. And there's going to be different requirements for the down payment if it's a home that you're going to be moving into. 5-10% depends on credit and some other factors that Jeff or Tony might be able to speak to in more detail. For an investment property, an investor is required to put 20% down. And there's benefits to putting more down up front, to maybe have a lower interest rate, to be able to get the perhaps have the 15-year mortgage rather than the 30. And as you were describing with the church and making these different payments, there's a lot of ways to be able to pay off the mortgage early, which is interesting because in the U.S. it doesn't seem to be a focus because there's tax write-offs with the mortgage interest that is paid. And so there's not a lot of incentive necessarily for us to pay mortgages off early in the U.S. In other countries, I've got family in Canada, and they don't have the tax benefits there. So everybody really focuses on paying off mortgages as soon as possible. And I think some of it, I kind of come back to the overall financial strategy that someone has, whether it's for their just personal finances, and how a house factors into that and a mortgage factors into that, and the value of paying extra, putting more on the down payment versus keeping that money for possibly something else. And again, different strategies. If it's an investment property, paying it off early so you have more cash flow coming in versus just letting it pay off slowly over time. So I think talking to somebody to help really put together a financial strategy, if it is an investment, then an investment strategy. And so I think there's a couple different ways to go about it. And the one thing that I will say, one last thing I'll say about down payments, once you've saved up a significant amount of money that you're going to put into a house, you've worked really hard, you have this money in a savings account, and then you buy a house, and it can be kind of stressful and scary because you've worked so hard and now this money has disappeared from your account. And one of the things I think is really important to keep in mind is you're not actually buying something in the same way that you go to the store and you buy something and that money's gone. Technically, the money is still yours. It's just not in an account. It's now invested in the house. So if you look at your finances from a net worth perspective, it doesn't change. If you had $20,000 in the bank and now your $20,000 is in your home, technically it's still your $20,000, even though it's in a different form. And I think that can be helpful for someone when they're taking a significant amount of money then and purchasing a house.
Okay, great. So we're going to talk about loans, FHA loans, and this question is going to be for Jeff. And so we would like for you to share with the audience for first-time buyers is what type of incentives that first-time buyers can be able to have access to. A lot of times sometimes brokers will say, well, can you apply, you're approved, or can you apply, or have you been approved for FHA loan? And sometimes individuals don't even know what an FHA loan is. So if you would kind of define that for us, FHA loans, and also, during the COVID-19, they're flashing it all over the news where the market is low of interest, where people can, this is kind of like the best time to buy, but people are fearful due to the COVID-19. And that's the reason why we're having this podcast today, is to be able to open and loosen up individuals, the audience, where they can feel comfortable and still be able to. This is really actually one of the best times to be able to pursue that type of, that type of investment. So.
Yeah, so thank you. So a couple different questions there. As far as FHA is a loan that is insured. It's not granted by the federal government. It is insured by the federal government in case there is a default by the buyer. The really big benefit of an FHA loan, well, there's a couple. The really big benefit is the amount of down payment that is required for the loan and the purchase. FHA loans only require a 3.5% down payment. So that is one of the least expensive ways somebody could get into a home as far as the down payment goes. If somebody is a veteran, they can get a VA loan, and they can do that with no money down. So FHA requires 3.5% money down. Now, for a first-time buyer, it is worth them asking their lender about a conventional loan, because conventional loans start with 5% down payment. So it does require a little bit more down, though a conventional loan overall is a cheaper loan because, without getting too far into the weeds, FHA loans have a mortgage insurance premium that stays with the life of the loan. And that premium is more than what you would pay for a conventional loan. So it is worth somebody checking with their lender to have the lender calculate what the difference is in down payment between 3.5% and 5%, and then also calculate what the difference in the monthly payment will be, taking into account the mortgage insurance premium, and they also have another fee that gets added to a FHA loan and an origination fee. So it's worth exploring both, and so that way the buyer, is more educated, and they can make the best decision for themselves.
Okay. And thank you for that. So we're going to go to the next segment, and the next segment is going to be in regards to brokers, okay? And so sometimes when individuals are purchasing a home, some individuals search for brokers online. Sometimes they are referred to a broker, and sometimes you can search on the Internet. And so we want to get into that just a little bit. We want to talk about the pros and cons of the best way to be able to seek out for the best real estate broker. We're going to talk about the frauds, and then we're going to talk about scams. So, and we know that there are a lot of that is going on now during the COVID-19 as well. So this first question in this segment is going to Tony. And so what to consider when choosing a broker. This is you talking to the audience as far as a potential renter, if they're looking for a rental property, vacation home, commercial property, or even purchasing their first home.
Thank you, Diane. Well, I'll tell you, it's very interesting how the industry has shifted tremendously from, let's say, 15, 20 years ago, when we didn't have as much online activity. Today, I would highly recommend that anybody who's looking to invest in real estate, whether it be for a primary residence or an investment property, that they they start their search online. They start their search for the real estate professional online, but there's certain things you really want to look for. Number one, ideally they do have a website. They do have a presence online. You want to know how long has this person been in the business? How do they have a specialization? What you just want to look at their overall presentation, and obviously you can reach out to most brokers via the internet. You can pick up the phone, you can call them, but you ultimately want to have a list of questions. I'd work with a checklist, a list of things that you can ask questions about as far as their area of expertise, their number of years in the business, the type of licensing that they've got, whether they are a sales only license or if they are a broker. There are a lot of brokers who are not active salespersons, and they just hold a broker's license, and maybe they have other sales agents that are working under their broker's license, and they may not be necessarily active as a sales agent, a representative of a buyer or seller. There are going to be some professionals that specialize in listings only, meaning they represent sellers primarily. There will be other agents who are buyer specialists. So there are a lot of different ways that we can be in real estate as professionals. We can be in commercial. There's some of us who are doing commercial and residential. So I think it's just really critical to vet them, get references, and call those references. Look at any kind of I would look at LinkedIn. I would look in as many places as you can possibly. I think the first place to start is just by Googling their name and seeing what pops up. And the more information they have, the better. But ultimately, you want to have some dialogue and you want to have conversation with them. I think with today's technology, it's amazing to get into a Zoom room with the respective broker and do a face-to-face. You don't necessarily with COVID today. We're not doing a lot of in-person meetings. Maybe we're meeting the clients once we get to the properties. A lot of our offices are closed. It's different state by state and county by county. But our offices have been closed for the most part all these months. But we are doing a lot of business. There's a lot of business to be had, but it's all happening online and through the Zoom rooms. So again, doing all your due diligence with the individual is critical. And that's what I would say.
Okay, thank you. Okay, and so this is for Lisa.
Diane,
we're gonna go ahead. Yes, of course, go ahead.
I was just going to add something about the broker or the agent. When I'm a buyer, I really want to make sure that the real estate agent is going to represent me and understand me and my needs. I've had a few cases where the real estate agent is trying to talk me into making a higher offer and, saying, well, I don't know. And I kind of feel like, wait a minute, are you representing the seller or the buyer? And if as the buyer, I want to put in a low offer, I want the agent to respect that and support me, knowing that maybe it means I don't get the house, but that's important. So that's something that really stands out to me, that as the buyer, I really want the agent to understand my needs, my desires, and then follow my lead essentially as the buyer, rather than try to talk me into something that I don't want or need.
I completely agree. I completely agree. That's super, super important that the real estate professional is very clear about the buyers, what their needs are, what their expectations are, and their objectives. So I agree with you.
If I could chime in for a couple seconds, agreeing with everybody as well. And one of the prevailing thoughts that some buyers have is, I don't care about the agent. So it's the exact opposite of what we're talking about. And they say, I want to go to the listing agent. And then the problem you have is is what Lisa just mentioned, in that the listing agent has a duty, a fiduciary duty, the highest duty possible to the seller in that case, to do the best job for the seller until a certain point. But so buyers think that that they can be better off by going to the listing agent, and as Lisa mentioned, the listing agent doesn't know anything about them. They don't know if it's a suitable property, if it checks all the boxes, if there's another property that could be better. So just another reason why somebody's probably going to be better served by working with one agent who really understands them and their goals and their motivations, their qualifications, and then focusing on finding them that right property.
Okay. That's fair enough. Okay. Go ahead. You wanted to add something, Tony?
It's just this is such a critical topic, because there are so many different dynamics to for the consumer as well as the broker, and like Jeff was mentioning, we have a fiduciary obligation to protect our seller, and or if we're representing the buyer, our fiduciary obligation is to protect them. And we see this a lot today, especially with the multiple offers that are happening. And I highly discourage being represented by having a buyer who's seeking to be represented by the listing broker, because you really can't represent both people fairly. And it's, they do have a tendency to think they're going to get a better deal financially, but at the end of the day, we see a lot of litigation. I was a broker of record with Keller Williams in Santa Monica, and I saw on a regular basis, disputes because of this what we call dual representation, which is a very dangerous space to be in, both on the broker side as well as the buyer and seller side. So this is very, very important. Get your own representative. Make sure you've vetted them out. Make sure they understand what your needs are, and just do all the due diligence you can.
I think research is very, very important when it comes to real estate. I think that sometimes the buyer perhaps may be on an entry level of understanding what they're looking for or what they're trying to buy, and sometimes, which is going to bring me to the next question, it's really like a two-part question, and anyone or each one of you can be able to answer this, and it's more like a challenge, so don't dry up, but it's a challenge question. So this is in regards to scams. They'll dry up like vinegar, please don't. But I try to bring all of the corners around to the audience. So this two-part question, the first one is going to be for scams. This is for the potential buyer, for the potential renter. And the second part of the question is in regards to how can real estate brokers evict. Okay, so here's the scenario, because you see a lot of live court cases that are going on where it's hard to get it's hard for the broker to make squatters leave. See, that's the challenge right there. Because we're going to the meat and potatoes, so it can be difficult. So that question is going to be to our audience that is listening that are real estate brokers and real estate agents, and the other part of it is helping the audience to be able to know how to avoid scams. Sometimes individuals do not know, and they're dressed, they're nice, they got everything suitable, that their attire is professional, but it's actually a scam, and that's what's running a lot of individuals into court that we see today. But then you see on the other part, for the real estate broker, they're having struggles as well as trying to, if they're trying to show a home and all of a sudden, okay, now a squatter has broken in. What steps can the real estate agent be able to take to get that squatter removed? And so I'm gonna share another scenario with you. Here in Tennessee, in Memphis, it was this mansion, and they went like 7 years in a court case trying to identify, and she ended up doing some jail time, I think like 25 years, because she took the judicial system on a very, very, very unnecessary roller coaster. This is my house. It was not her house. I think it was Isaac Hayes' old mansion when he was living and what have you. And she went in there and took full possession, and she didn't have no right to do it. And it took the courts almost 7 years to get this woman out of this house. That's ridiculous. And so that's for the real estate side right there, for the real estate broker and the real estate agent. The other part of the question, how can the potential buyer, and I know it's this a lot, but if you can tackle it, you can. How can they avoid the scam artist? So that we're going to start with Jeff on that one.
All right, so we have a three-parter. As far as scams, the biggest scam that I see out there, and it's especially in our area, is with regards to renters. And the scam is, especially when a scam artist knows that the property is vacant, and if there is a landlord advertising a property, it's going to be either the tenant gave notice and they're still there, or the tenant left and it's a vacant property. The biggest scam is the artist finds the vacant property that's being advertised, and they do their own advertisement. They take the pictures and they make up some story. I live out of the area. I just really want somebody good who's going to take care of my home, and I know that I'm asking, if the market rent's $2,500, I know I'm only asking $1,500 a month, but I'm doing that just because I want somebody good in my house, and all you have to do is send me your move-in fees and your deposit, and I'll send you the keys, and this will be great. I have a couple of rental properties, and it seems like every time that I'm renting one of those out, I get people call and they say, I see one ad for $2,700 and one ad for $1,700. Which one's right? And I say, yep, the $1,700's a scam. So that is the most prevalent one that I see in our area. And there's the trite phrase, if something seems too good to be true, it likely is. And 100% of the time, when it comes to somebody looking to rent a home, and it's just so far under market that the natural instinct is awesome. I would love to save money on rent. You just have to watch your checkbook, because that's going to be a scam. So that's the biggest one that I see with rental properties. With purchasing, the biggest thing somebody has to keep in mind is when they're wiring money to the escrow company. In California, we have a wire fraud advisory form. Unfortunately, people probably sign it without reading it, just because we only have another 30 pages that somebody has to sign. And, at some point it's just, where do I sign? Let me just move forward on it. And the reason why we have this disclosure form or advisory form is because wire fraud is real. There are bad people, bad actors out there that are monitoring people's emails, and when they see that the final funds need to get wired to escrow, $50,000, $100,000, $200,000 getting wired from one account to the other, and they intercept that, they make their email look just like the escrow company's email, and they just stick in their wire account instead, and the money goes to the wrong place, and it causes a lot of problems. So the best advice for anybody buying, I tell all of my buyers that. I say whenever the escrow company is asking you to wire something, is to always call them to verify the account number in the email, and always verify the amount. And that is a way to avoid being duped as far as that kind of a scam goes. Quickly on squatters, California's moratorium on evictions just got extended to June 30th. It is extremely difficult to get a squatter out, or somebody that just isn't paying rent. You can't evict somebody for not paying their rent. So I've had a couple of investors that were looking to purchase a property, and when it's tenant occupied, that brings a higher level of risk. The nice thing is that they have a tenant there. The uncertainty is that tenant going to continue paying rent? Now, at the beginning of COVID in March and April of 2020, it was a lot riskier than it is now, because then we didn't have any track record. Is that person going to lose their job? Are they just going to take advantage of laws and not pay just because they don't have to? At least now we're almost a year later, and we have a track record, and the tenant has a track record. What did they do last March, April, May? Have they paid the last 9 months, 10 months? Mm-hmm. So that risk, while it's still there, has greatly gone down.
Okay. So with that, go ahead.
No, I just wanted to piggyback off of Jeff with regard to a lot of scam that I'm seeing is in the older adult senior category. I see a lot of deed fraud with the seniors, and what happens is if they are no longer residing at their property, let's say they move in with a daughter or a son, or they move in with one of their kids, and they're aging gracefully, but they've got a property that's sort of sitting there vacant. That's a prime target for deed fraud. Somebody to come in and actually scramble up the deed and try to take ownership of the property. We see that a lot. It's really, really unfortunate. We also see with regard to these rentals, and I happen to have a building myself. When these tenants are protected from having to pay rent, they are also there's not the same level of protection for the landlord. So the moratorium is applicable for the renter, and they can't be evicted. But at the same time, the lender that's financing the mortgage on the property, if they're not federally backed, they do not have to participate in any kind of foreclosure protection. So that becomes really challenging when the landlords are not having the same level of grace and protection as the tenant. Mm-hmm. And so, we're starting to see landlords who are going into foreclosure because they're not getting the rent, and therefore they can't pay the mortgage, and the banks are not working with them if it's not federally backed. I don't know, Jeff, if you've heard about this, but this is becoming more and more of a problem that we're seeing. And then there's a lot of tenants who are just taking advantage of the system that really are just not paying rent because they feel like because of these guidelines, they're just taking advantage of it. So it's really a scrambled and a very unfortunate scenario that we're dealing with. So I think we're going to start seeing a lot of pre-foreclosures, both in residential and with investment properties.
That's a great point, Tony, and that's always been puzzling to me. Even maybe not in March of April of last year, but as we've had either extended guidelines or new guidelines that the tenants are being protected in case they've had any income issues with regards to COVID, though for some reason, as you just mentioned, the landlords get kind of left out. Like it's the landlord's job to pay the mortgage, but it's not the tenant's job to pay rent. And there's definitely a disconnect there from the government level. The government is taking care of tenants, which is great, but what about extending that to the landlords and trying to figure out, why does the landlord have to foot that burden? They have families, they have businesses, they may only have one rental property, which is, was going to be going towards their retirement, and because of this rule, they could lose their property over it, and it seems like that's getting overlooked. So thank you for bringing that up.
Sure.
Okay. So, Lisa, did you want to expound on that since your state is different from Tony and Jeff's? Would you like to share?
It certainly is different state to state, and even within some states, landlord and tenant laws are different. From an investor perspective, it's part of analyzing markets and deciding whether it is a good market or the level of risk involved, right? Because if the laws are more friendly to tenants, then as a landlord, I have a greater amount of risk. So I tend to look for markets where the laws are more landlord friendly, and that's not because I want to take advantage of my tenants. I want my tenants to be in wonderful homes. I want them to be happy. I want my properties to be in really good shape. I just want less risk as a landlord. So I do tend to look and choose markets that are friendlier for landlords for that reason.
Okay, great. So the last segment we're going to get into is going to be the checklist. And so this is something that it needs to be shared. It needs to be, expound on, because a lot of times when individuals go to purchase a home, they I like it. And, they see the outside of it. And then, it has nice windows. It has nice tall ceiling fans. And after they have purchased it, and then something goes wrong 5 or 6 days later, then they call the real estate broker back and, want to bang on him or her and say, oh, you left this out, And so that's what we're going to talk about. And so this first question is going to be for Tony. And so it's going to be the importance, how important it is for a renter or a potential buyer to be able to carry a checklist with them, and where they can be able to retrieve a checklist from, so they can be able to cover all of the areas before they buy or rent.
Well, the checklist is important. Now, every brokerage, every sales agent, we all have various types of tools and resources for our client. I think that it's critical for the agent to be very clear with the buyers that they need to, and we have various disclosures and advisories, if you would, that actually are created by the state Association of Realtors, depending on what state you're in. But we advise the buyers to do their own due diligence. Now, the brokers can't be completely responsible, but we are responsible for letting them know that they are responsible for doing their own due diligence. So they should have a home inspection. In some cases, they may need to have more than one inspection. If you get a general inspection, that general may call out further inspection on something that looks like it needs a specialist to take a deeper look at it. The importance of making sure that their contingencies in the transaction are critical. So a contingency is a protective factor that says this purchase is contingent upon an appraisal, it's contingent upon a loan approval, it's contingent upon an inspection and all the due diligence of the property, and in other words, all the investigation on the property. So there are timelines that are attached to those contingencies. It's very important that the agent, broker, keep the buyer in tune with those timelines, because not being protected with your contingencies could be a huge problem for the buyers. So it's important that they understand that there's a period of time that they have to do their due diligence and make sure everything is in order before they are required to remove those contingencies. So there's that, and there's also things like home warranty. Some people I always buy the home warranty for my client if I'm representing the buyer. I buy it as a closing gift. I pick up the home warranty because the home warranty, especially in that first year, there's all kinds of things that can present itself even after you've done your inspections, even after you've closed, that will come up, and you want to make sure that you have some sort of policy in place that will cover you for appliances or electrical or plumbing, even roof and pool, etc. But these are things that you want to make sure that they're just additional protection factors. Now, when it comes to an as-is sale, you see that a lot. You see property sold as is, and a lot of times sellers, in their mind, they're saying, "We're not doing anything. We want you to know up front. We're not giving you any credits. We're not repairing anything. So you're buying this as is." However, the buyer has every right to do their own due diligence. Now, if something comes up in that process, and it's a major item, they still have the right to ask for a credit and or repairs. It doesn't mean the seller has to do it or will do it, but they still have the right to ask for it. So those are the kinds of things that I would say are really important to stay tuned into when you're in the process of acquiring a property.
Okay. Jeff, would you like to make a statement on that? And because in regards to the as-is, sometimes individuals, they will polish up some things. When we purchased our first home, personally, myself, we didn't check the HVAC. We didn't check any of those things. There were some checklist options that we had, but we forgot to check that. And then, of course, about a couple of years down the road, it went out. And so the full expense was, on us. So would you like to expound off of what Tony had just stated?
That was thank you. Tony had a very comprehensive answer. There's not a lot to add to it. The as-is part is a very, very common question, and both from a buyer and a seller standpoint. Just the fact that a seller wants to sell as is, and in fact the California purchase agreement. There's a paragraph that says that this home is being sold as is. As Tony mentioned, it doesn't mean that the buyer can't ask, and it doesn't mean that the seller has to do. Typically, that when a buyer does their inspection of the property, when the inspection comes back, and that's when the buyer can ask for either credits for some problems with the house that weren't disclosed, or they could ask the seller to fix them. That is a point in the transaction where the whole purchase transaction really comes to a halt at that point, and you enter into a new negotiation between both parties. And that's a point where if the seller doesn't want to fix or credit, then the buyer has to decide, do they want to take that on and move forward with the purchase, or do they want to cancel? So that's a very important part of the contract and a very important part of the purchase process. And as far as a checklist goes, a lot of the things for the inspection of the house, there's a checklist for what a buyer should be looking for, and they don't get caught up in after they park their car there was a white picket fence and that was a vision that they had as a kid of the house that they wanted to buy. The buyer does have to have a checklist of what are the musts that the house has to have, and then what are preferences. As far as the inspection goes, that should be covered by the inspector that is hired. So a buyer should never bypass getting a property inspected, and they should always go with a vetted inspector. Hopefully it's somebody that the buyer's agent has done business with and knows that an inspector is good, and they're going to cover the major systems. So it's not that there's a cracked floor tile unless that requires further investigation, because there could be a slab issue, but sometimes it just wasn't laid properly, or somebody dropped something on it and it broke. The inspection is for the big reason is for those major systems that could really cause somebody to come out of pocket a lot. If somebody needs a new roof, that could be as cheap as $7,000 or $8,000. It could be a $25,000 job. Sewer line system, electrical and plumbing. These are things that buyers definitely want to make sure is at a minimum vetted by their inspectors so they know what they're getting into.
Okay, great. Okay, thank you. So this last question is going to be the last question of this collaboration for today, and this is going to go to Lisa. And so take into fact as to what Tony had shared, also as to what Jeff had shared. So take, for instance, if something does go wrong and the individual says, well, I think I've been had or what have you, are there any resources that a potential buyer can be able to access, maybe like the Housing Fair Act? Is there any other retributes that they could be able to access in order to file a complaint or something if they feel that they have been under fraud or they feel that they did not get the fair share as to buying or purchasing a home?
So great question, and there are protections out there. There are resources. The first thing that comes to my mind is work hard to prevent those unexpected, like do the due diligence before purchasing a house, have the inspections. A lot of people kind of feel, again, overwhelmed by such a large purchase. So if they can save $500 or $800 here and there in the purchase process, so like maybe we don't need that inspector or this inspection, then they tend to do that, and that's where you run into trouble. It'll cost you later. It is worth investing in those inspections and making sure things are really taken care of on the front end. And I would also say, especially for people who are first-time home buyers, it can be a really overwhelming process. Encourage people to educate themselves, talk to other people, talk to multiple lenders, talk to multiple agents, and just all of those conversations can be a learning process. Advocate for yourself throughout that process. Hopefully your agent is also advocating for you, but ultimately you are the best person to advocate for yourself. And it's much better to avoid having to file those complaints. I think there's a lot that can be done ahead of time. So if we can avoid that, then that is clearly going to be the preference and much less headache. That being said, things can happen. The unexpected can happen. But if you know that you've done everything and so when something unexpected happens, it really is just something unexpected and it's not foul play or, the seller was trying to hide this or that, to feel good about that. And I also think financially planning ahead for unexpected expenses is also a really important part of planning and purchasing a home as well. So I know I didn't answer the question about the specifics, and maybe Tony or Jeff want to jump in about specific agencies and policies and things that can protect people if something does go wrong. But I really do feel like there's so much that can be done ahead of time that's worth investing in, worth spending a little bit more time and money on up front to try and prevent those situations.
Yeah, I can jump in just quickly and give an idea of where one would go. I mean, it really depends on the type of complaint and whether it's against the agent or if it's against the seller or the principal or if it's a buyer complaint. There's always the broker of record for the agency that's representing the principals. I get, as the broker of record, I would get a lot of calls. And that's typically where they start, is by calling the broker with the complaint. And then from there, if they need to get deeper, if it can't get resolved at that point, then they start contacting the Department of Real Estate, or they contact the California Association of Realtors, or whatever state you're in, the association that represents the real estate professionals from there. There's, like I said, it depends on if it's a complaint towards the agent or towards the one of the principals. So, they typically start by contacting the broker.
Okay. Okay, great. So that's all for today. Anyone else have any last-minute tips and resources?
I'll just, if I could just add or supplement part of Lisa's answer previously, is for a buyer, it could be common to keep on asking your agent, what do you think, what would you do, what would you do? And as Lisa was mentioning, buyers really need to go in as their best advocate. And the reason is, when Tony and I get asked these questions, what would you do? And I have rental properties. I've been an agent for almost 20 years. I'm going to look at things differently. I'm going to have a different risk profile for myself and for my family and for my purchases and my investments. So, sometimes the agent has to be careful, and it's not from a fraud. It's not from a wanting to do the right thing. It's I could say, well, I'd be comfortable with that, but so what? It doesn't make a difference that I would be comfortable with it. It doesn't mean somebody else has to be. So, it's okay. Ask your agent's opinion, though ultimately don't lean on it. You have to, do whatever information you need to gather, and your agent should be part of that process. Don't make that the last part of it. You have to take everything in as a buyer, be your best advocate, know what you can and can't live with, what risks you can live with, and what risks you can't. And ultimately, it does land on the person that is either buying or selling or investing.
Yeah. Okay, great.
Agreed.
Okay. So what we're going to do now is we're going to let each guest go around the table, and they're going to be able to share any information that they would like to share with the audience, any books that they have published, any social media platforms that they would like the audience to follow them with, or any website links. They can be able to do that at this time, and we're going to start with Lisa.
Thank you so much, Diane. It's been a pleasure to be on the show and be part of the conversation. My website is the REI Concierge, so TheReiConcierge.com. And we have an online course that is about investing specifically from abroad, but if you're investing just from out of state or out of town, the principles apply as well, and would love to hear from any of the guests who have questions or comments.
Okay, perfect. Tony?
Yes, I can be reached. My website is TonyPatillo.com. That's T-O, N as in Nancy, I, P as in Peter, A, T as in Tom, ILLO.com. So it's my first and last name.com. And you can email me. My social media handles are also Tony Patillo, at Tony Patillo, for Facebook, Instagram, LinkedIn, and Twitter. So you just put in the symbol at, and then it's Tony Patillo. And you'll find me in social media.
Okay, thank you. Jeff?
Well, thank you, and a pleasure being part of the show, and I appreciate the opportunity. The website that I have is Team, T-E-A-M, Team 805, or Team805realestate.com. And those are the same handles for Twitter, LinkedIn, Facebook, and Instagram is Team 805 Real Estate. I do have a podcast as well, and it can be found on all the listening platforms under 805 Talk.
Okay, great. So just to recap, we have talked about buying a buying plan, budgeting. We have also talked about a checklist. We've talked about scams and frauds, who you can be able to contact just in case, do your due diligence. All of the effects basically is on the buyer mostly, and then you can also be able to talk to your broker. And we also have talked about how to find the best broker so you won't run into frauds and scams. Again, this is Diane Winbush. For all of our upcoming shows, you can go to our website, of course, at www.womenwhorockwithsuccess.com. And you can also follow us on Facebook, and we're also on Instagram under Women Who Rock with Success. and Women Who Rock Investigate. So thank everyone for being a part of the panel on today.
Thank you,
for
Diane.
having us, Diane. We appreciate it.
So,
Thank you.
you're welcome. Have a great day.
All right. Thank you.